Okay, so hello everyone. I'm Federico from Bitfinex. Bitfinex, we've been, we are like one of the oldest exchanges out there since 2012. But we're also been the first exchange to integrate Lightning Network, and we run some of the biggest Lightning nodes in the network. So we are always been big believers in this technology. And on top of that, we are also big supporters of RGB, which is the protocol for tokenization on top of Lightning Network. And we supported the protocol from the very beginning, and we also have a team that does full-time open source development for RGB on Lightning. We are really trying. We are a big believer in this technology, and we are really doing our best to make sure that it is going to be successful and it can be used at scale. So today I'm going to reflect a little bit on how we can envision a near future where Lightning really becomes used at a much larger scale than what we are seeing right now. So I will start from a first observation that is similarly not directly related to Lightning, but then it connects to Lightning. The fact that now, we see a trend that everyone wants to try to create beta on Bitcoin, to create yield on Bitcoin, to outperform Bitcoin investment. And people try to do it in different way. In the past, they were doing it, still today, but some people do it, but in the past it was more popular. They were doing with altcoins. People try to trade to try to outperform Bitcoin, or now they try to do it with a treasury company. But the problem is that all of this system, they carry extra risk. So you are trying to create some returns on top of Bitcoin, but you do it by introducing a lot of risk. So it's not ideal, and you can easily end up performing much worse than just holding Bitcoin, which is also what many times actually happens. So so Lightning can be a true solution for this, because while Lightning is a technology that requires liquidity to facilitate payments, because you need to have nodes that lock liquidity in the network so that routing can happen at scales also for large amounts. And but also those that provide liquidity, they can collect fees. They collect fees on the payments that go through their node. So these fees basically are a way to generate a return denominated in Bitcoin. You deposit Bitcoin, and you get a return on your Bitcoin. So you keep your Bitcoin exposure, but you get extra return on top of it. So this is actually what people are looking for. If you want to outperform Bitcoin, this is the way you can do it. You can lock your Bitcoin, and you generate yield on top of it. So if Bitcoin goes up, you have the capital gain, plus you generated fees. And this is particularly good also because it doesn't introduce any extra risk, because there is no counterparty risk. You can manage your own node. There is no lockup. You can at any moment you can close your get your Bitcoin out of the Lightning node and use them as you wish. Unlike when you invest in a treasury company, then your wealth is locked in the treasury company. You cannot easily get out. So there is no lockup, which is very important. You don't have any inventory risk than you have when you try to do some trading to try to outperform Bitcoin. And basically, you only have the cost of running the infrastructure to run the Lightning nodes, which if you do it at large enough scales, it doesn't impact the revenues that you can generate. But there is a problem. Currently, there are not enough volumes on Lightning to enable yield generation at a large scale. So people are generating yield on Lightning, but not with a large amount of capital. And this is because not enough people are currently using Lightning. I mean, it's growing a lot, the adoption grew a lot in the past years, but still is not a big enough, we don't have big enough volume to truly sustain a large yield market on Bitcoin. And this is because, I mean, while in a way Lightning payments are still too niche, also because, to be honest, like most people don't care so much about paying for stuff in Bitcoin. Those that have Bitcoin usually like to keep them, and also like that there are frictions given the volatility of the asset and for the merchant to accept Bitcoin in some jurisdiction. You also have like tax implication or like accounting complexity. So. And now also like Bitcoin payments, they are facing the competition from stablecoin payments. So because of these reasons, the payment use case is not enough to generate good volumes on Lightning. So how can we fix that? Basically, the best way to generate volume on Lightning, the most realistic way, is with trading on Lightning. So trading is a use case that is much more appealing. I mean, there are a lot of people that love to trade more than they're interested to do Bitcoin payments. And those people, they can also generate much more volumes than just payments, because they can cycle around like large amount of capital while activating their trading strategies. And but to enable trading, we need to have multiple assets on Lightning, because on Lightning with only Bitcoin, yeah, we do trade Bitcoin for Bitcoin, so we need to have multiple assets. And the way to have multiple assets on Lightning, it can be done through the RGB protocol that in Bitfinex we are heavily investing in. So with RGB, you can tokenize assets on top of Bitcoin and then create Lightning network channels denominated in an RGB asset rather than just in Bitcoin. So once you have RGB Lightning channel denominated in stablecoins or like in other assets that people may be interested in, then you can have atomic swaps between Bitcoin and RGB assets on top of the Lightning network. So this is great because it's also a superior, it can enable superior trading experience compared to what you have with DEXs on EVM chains. Because with DEXs on EVM chains, you need to publish your transaction on the mempool, which and get it confirmed in a block. So this is this means that yeah, first of all, you need to wait for block confirmation. You need to pay on-chain fees. But worst of all, everyone sees your transaction on the network, so they can use it to front run you, especially with the AMM model, which is yeah, is very sensible to ordering of transaction in a block to determine the execution price of a trade. So with Lightning, you don't have all of this problem because the trade happens off-chain on Lightning, so you don't need to wait for block confirmation. The latency can be very, very low, especially if you have a direct channel with your trading counterparty. You don't need to pay on-chain fees, so the trade can be very efficient. And most importantly, the trade is private. No one knows about the trade is happening if not the two parties involved. Not even people that are maybe doing some routing for you will know that the trade is happening. They only see that they are routing some Bitcoin or some USDT, but no one will ever see that trade is happening. So they cannot, no one can use that information against you. You don't have the problem of miners front running you or Flashbot front running you. So, and on top of that, you can use any price discovery mechanism, any pricing algorithm as a liquidity provider. You are not constrained by the AMM model that you have this like a simple equation that is oversimplified in order to save on gas fees on Ethereum, but then it is obviously it results in pricing that is not the ideal pricing that you can apply when as a liquidity provider. So with Lightning as a liquidity provider, you can have a better pricing logic, and all of this together, it can bring a much better pricing for the traders, and in general trading experience that can be superior and can eventually become closer and closer to what you have on a centralized exchange, but with the full decentralization of Lightning Network, with the full security guarantees of Bitcoin, because we are not introducing any trust trade-off. So with trading, also trading is a particularly good use case because the traders are quite different from, I have a different expectation from people doing payments. So when you do a payments, your expectation is that, I mean, you tap your phone, in a few seconds the payment is settled, you pay zero fee, and everything is super smooth. While traders are a bit less picky with smooth US, because traders, they are doing something that they expect is making money for them. So they are willing to also handle more complex user experience, to deal with, to suffer a bit more, let's say, when they are using a trading tool, because they are more motivated, and because they are doing something that they believe it will bring them a profit. So it's also a better class of users for a technology like Lightning that still has room to improvement on the usability side. So yeah, with trading we can we really have the potential to generate volumes, and specifically volume on the Bitcoin, Lightning volume on the Bitcoin side, because with USDT on Lightning you can also argue that you can have more payments volume, because more people are interested to pay with USDT than with Lightning. But it seems like the payment volume that will be generated with USDT on Lightning is not gonna enable Bitcoin yield, because the fees will be mostly like the liquidity providing will be in USDT, so you will generate yield on top of USDT, which is great, but less interesting, because there are more ways to generate yield on USDT than there are to generate yield on Bitcoin. But with trading, okay, there will be routing. You will also need to have routing on USDT, but you also generate a lot of routing on top of Bitcoin liquidity, because there are two sides of the trade. So how this can also benefits Lightning in general. So we start with bootstrapping trading volumes by enabling trading on Lightning. This will generate more fees for the node operator, for the liquidity provider, which generate yield for those people that are locking liquidity in Bitcoin on top of the Lightning network. All of this will help to have more investment in Lightning infrastructure, because there will be more interest from investors and from companies to invest in Lightning infrastructure, which will bring better UX, which can boost even more trading volumes, but also like start boosting more payments volume, because we will have a much better Lightning also for the people that are only interested in Bitcoin payments. So I really see this as the way to truly get Lightning out of the niche where it currently is, and become much more mainstream in a very sustainable way. So all of this, all of this, it's all already possible. I mean, RGB has gone in mainnet this year. We already have the first few project building indexes on Lightning, such as Kaleidoscope, which I believe will have a presentation later. So all the pieces of the puzzle are there. Now it's all about like putting them together, making them work smoothly, and have great tools that people can use at scale. So yeah, this was the end of my presentation. So thank you so much.